Hello traders, welcome to the TMT Daily Strategy video for Monday, June 4th. Hope everybody enjoyed the weekend. Just to let you know, for those of you who are doing private coaching, please check your inbox. We have the calendar coming out this week, so if there's a discrepancy on a day that I have you down for private coaching, just let us know. Just send an email over to support@tradingmarkettechnicals.com. All right, traders, we had a massive move to the upside, up 30 plus handles in the ES. We had a beat across the board with non-farm payroll numbers, and like we were talking about, it's going to be how the market participants react, not what the actual number is. Sometimes, depending on the cycle of where we are in the markets, good news is good news, bad news could be good news, and then you have the good news is good news and bad news is bad news. I know it sounds ridiculous, but that's what we have to follow. And where are we in these cycles of peaks and troughs of the markets? And right now we've been kind of hovering into that symmetrical triangle we broke out of, and then we had 9-10 days of literally just chop, and then extreme chop in this case of a big move up, big move lower, big move up again, big move lower. So we're just kind of going around here, not really doing much and not getting any type of movement at all to the downside and or to the upside. So we did break that I think that Thursday low where we really broke out of that sideways consolidation, and then it said we need to get that back, and we did, and then some. Now we're knocking on the doors of taking the resistance of that horizontal trend line, and then see where we go from there. I will tell you, it looks very, very good. Now you see what a day makes. Just a few days ago I was saying I'm not liking the way this price action is. We got to really get going to the upside, otherwise we can really break down and start testing the 200, if not even go down further. But what kept me at really getting really bearish, overly bearish, is because we still have a lot of those gaps that need to be filled. And trust me, I've been doing this for a very long time. Gaps ultimately get filled, and when you're that close, it usually fills the gap first before we move lower. If we can get this, and I continue to say if, never want to be so confident and we're definitely going up or we're definitely going down. Is because that the markets are made to fool the masses, and it's been very difficult for the last 10, 12 trading days, pretty much all of May, right? We had big moves to the upside, thought that we're going to hold and we're going to get some follow through, and we did not. Well, we're back at it again. Now we're testing the resistance area, and we need to see Monday start to break out. We really need to see this market follow through. We've had no follow through. We had big up days by follow through, some big down days. Well, we do have mutual fund inflows that are coming in the first couple of days before and after the first of the month. So hopefully, just hopefully, that we can get a nice little pop going higher. And there's some evidence that I still believe that the market will challenge the highs, if not break new highs, and I'm going to show that to you right now. Right in front of you is the McClellan oscillator, very reliable indicator. It's definitely one in our model. You can see where we are here. We're at 19%. We're basically at a neutral state in the market right now. Now, yes, there are other indicators that are overbought, oversold that'll tell you different, but this is really I like to see where I get more of my weight from as far as overbought, oversold. And you can see we got plenty of room to run to the upside before we can actually start saying, guys, we're looking for a reversal right now. We're not even there yet. So to me, a lot of movement to the upside. I think it has a lot more room to run. And don't forget, though, we have to always never discount the fact that we can go lower, and we have plenty of room to run before we get into these washout levels where we're looking for a major reversal here, okay? So as of right now, neutral state of the market, okay? VIX, I do think the VXX will crash this, break this level lower, 34.23, and we get back into a 29 handle where we would dollar cost averaging a long trade in VXX. Why? Because we would start shorting the market at higher prices and dollar cost average that. If that were to happen, we would get a gift, guys. This would be an ultimate gift. I don't think the markets are starting a new leg up in a bull market that's been going on 10 years. It's not going to happen. I don't think so. But I will tell you that there's a lot of bigger players that are still long and need to get out of this market. So they're booing the market, holding this market up in anticipation of higher prices so they can start selling into these rallies and they can reduce their long exposure. And that's really how this game is played. Now, what I want to show you is, before we get into the 5-minute chart that I showed you on Friday, I want to show you, actually, let's get into the 5-minute chart real quick. I just want to show you the structure here where we were down here. Remember I said, guys, we're at the 61.8% retracement, and then we pull back down here into the 50% retracement, and now we need to start moving. Well, this is all Friday's move here. You can see here, right? 6-1. So we took it all back and then some. Very, very strong move in the ES 5-minute, okay? So now, obviously, this Fibonacci retracement is gone. But what I want to show you more before we get into ES is I just want to show you a daily chart of the spiders. This is the end of day. This does not include intraday or pre-market or after hours. This is just pure price. And what we're showing you is that we are making higher highs and higher lows. And although we have this chop here for the last 12, 13 trading days, right? 10 to 12 trading days, you could see that here. Sideways consolidation. Let me just draw that for you guys. Right? And you can see that we did break that low on Thursday. We came out of that channel. We came right back in it, and then now we're testing the upper end of the channel. I'll show that to you. I'll clarify that with you a little bit more. My point for the chart is that where do I see this this market going? Well, we have two spots. Challenge the highs right up in here, okay, and this is the more extreme, will be the upper end of this channel right up in here. All right, now where is it? What's the number? Well, we're looking at right up in here, 287, and the top line here at 294. Can it happen? Absolutely. At the very least, I believe that we will challenge the highs and absolutely challenge this swing high here at the 280.43. Okay, so just write these down on your charts and just make reference to these areas. And these are the areas, the 280. And then the 286, and then here at the 294. These are areas that we're going to start looking for sell signals. Not that you sell the market, but we're going to be looking for sell signals. So when that time does come, we start dollar cost averaging a trade. So this will be a little map of the market for the next several weeks. We'll bring that to you as we take on each day. Okay, so here's the ES. Great looking chart, right? Now look what happened. We went out, and I keep saying it was Thursday, but this was actually on the 29th, and then we had the big move up on the 30th, and then we took it all back on the 31st, and then on Friday we had that big explosive move up on non-farm payroll numbers. So we're knocking on the door of this sideways consolidation. Nothing has changed as far as levels. 2746 to 2756. That's going to be the next gap fill area. We take that out, we run right up to the 2789.50 and start taking these two other small little gap areas out on the ES, okay? And then we would ultimately challenge the highs. I think the MACD RSI, yeah, it rolled over a little bit, but that's to be expected. I do think that we are looking to move higher, and MACD and RSI will adjust. And you can see that it's starting to curl up here, back up again. So we need to take this area out. So really no change. But what I wanted to express is the put down in more of a view to show you that, hey, you know, we're moving higher. I like the structure here, and I still like it. I've always liked it. I just didn't like this move lower here, but we took that back, and that was great. I just wanted to point that out. And make sure you guys understand that it looks pretty good. Now, even though we went higher, the YM did not, the Dow. Now, does it need to? Well, you know, it is our out of the 5 indices that we follow, it's a laggard to the other 4, right? So I'm not so worried about that too much. It did move a little higher, but it didn't move as high. It didn't move as much as I'd like it to. So, but we're still within the channel, constructive. 24,934 remains resistance, and then 25,000. NQ. Now, I could actually say that we did, obviously on a closing basis, took out that last gap, and I'm going to remove that last gap. That's gone. So we did fill the gap here. Officially on a closing basis. Remember, on an intraday, we almost did it on an intraday basis here on that doji. But we absolutely filled the gap, and now we're going to challenge the highs. This is very bullish. When technology starts to rally, this is bullish, and technology could take the leadership role again, where we had energy for the last 4 weeks take the leadership role, which really is not a great thing because it's not a big complex, it's not a big sector where it can take control and move this market higher. For a short period of time it could, but I'm glad to see this happening. Again, stating the bullish case that we would see more higher prices. And again, that 71.50 should get taken out in the next couple of weeks in the NQ. Transports, I like to see this now break out. This is okay. We're knocking on the door of this sideways consolidation. 199.16 remains that area of resistance. Okay, but I do like the way that this now is starting to wake up, if you will. Right, Qs, same thing, massive move to the upside, looking really, really good here. So I'm going to remove. We did fill a gap here, yes, once again. So this is gone, 173.65. And remember, guys, right, we were down here. We're saying that we think the market does move higher. And sure enough, we got that 5-day rally. And now we're looking to challenge the highs again. Can you imagine? And really no new change. This is what's what the beauty of this is that there is no new real change. We did go through earnings season, and yeah, there was some great earnings and what have you, but the market didn't really react so great to great earnings because they brought the earnings estimates down. They're buying back stock. There's no growth over here when you're buying back stock, right? When a lot of these companies buy back stock. So this is a great sign where nothing has changed, and from getting short here, where all of the pundits were short, and you might have made a little bit of money, but the bigger money is going to be up here, up higher, okay? Next is going to be the Russell, and again, Russell taking the leadership role. It is one of our leaders. We have a doji, which is fine, nice little pause day, a little indecision, and that's fine. Even if it came all the way back down to the 161.52 or even the 160, which is the 21 EMA, not a big deal, okay? Not a big deal at all, but we are sideways and holding the upper end of that range. All right, and here's the spiders. And I showed you that price on the daily. We're holding that in here, 272.99. Should get taken out on Monday. And then we're going to look for that last gap area here. There is, somebody pointed out there was a gap up in here. There isn't. There's price rallied up here, closed up here. You could point it out that we do have a gap, but it did travel there. It is on a closing basis, so if you want to say that it's a gap, we can do that. Not a problem at all. So something like that, we would still be looking to challenge the highs either way. All right, next let's go into the crude oil. And we have here crude oil commitment of traders. We can see here that we are a little bit lighter on each of the move, on each of the week, right? Making higher highs and higher lows on a histogram chart, and as well as the speculators reducing their long exposure. So we're going to be looking to see where does this corrective move lower stop, right? Well, let's take a look at the weekly chart. Now the weekly chart, we're sitting on the 21 EMA right now at 66.63. My guess is that we hold the 200-day moving average, which comes in at the 63.97. Let's call it 64. So we probably have $2 to $3 of more downside probing, and then we probably hold ultimately that 61.73, $62 in this area here. So 61.73 to 64. So you got about $2.50 here and change, give or take, of more downside. But then I think this would hold, and I think this would give us a bigger push to the upside to challenge 74.75, right? And then start to move lower. The bigger move lower, back down to the 55 area, into this big, large base we've had since 2016. If you take a look at the daily chart, you'll see what I'm talking about. We have a gap that needs to be filled, right? This one got filled the other day, and now we have this very large gap here that needs to get filled. So in order for us to move lower, again, and we're that close, should start to see movement in crude oil. There needs to be a catalyst, of course, but if we can get some movement, like I said, maybe we get back down into here, we're at $65, 63, 64, we lose this little spot, we'll get into here and then start a corrective rally back up and even take out the interim highs of 72, 73, 72 and change to get to 74, 75, and then the big flush back down to $55. That's what I'm looking for in the next several weeks. Gold, let's take a look at gold. Now we have the producers starting to lean on gold again, hedging a little bit more. That doesn't mean that gold's not going to go lower because they're starting to short again. They're shorting each week, but they're not going to short everything. They're going to short as much as they can for 1 week and move on to the next week. So this was a very good move that we knew as the gold was selling off, they were lightening up their low to start putting on a little bit more short one more time to push this market lower. And here you can see GDX absolutely going nowhere. This has been dead money, guys. I mean, other than a couple of moves higher, a couple of moves lower, if you trade it on an intraday basis, it's a very difficult trader at the moment. Let's break this symmetrical triangle. Let's challenge the 21 and get back ultimately down to the 19 handle. We can get into that area, then I think that gold will follow suit, and that'll put us into a perfect buying opportunity, which is going to be anywhere from the 1260 to 1275-ish area, okay? We need to lose this little spot here at 1290. We should get that flush back into the 1270, 1275 area, okay? I'd be a better buyer than a seller in gold.